You're listening to the Prosperity Report Love and Money podcast. Find out what every couple needs to become a winning team in love and money. We bring you actionable ideas from expert therapists and experienced married couples, helping you stay happily married longer. Stay tuned until the end. We'll leave you with a tip you can start using today in our 5-minute activation segment. Now here's your host, best-selling author, speaker, and psychotherapist, Kanae Corder.
This episode is brought to you by my course called Learn to Control the Controllable. If you'd like to learn how to control the controllables in your life, if you want to learn how to stop struggling and receive your life, your blessings with grace and ease, this is the course for you. Go to kanaecorder.com/meditation-course to get involved. If you are struggling against the universe, forcing things, pushing, this is the course for you. It's really easy. You'll go to kanaecorder.com/meditation-course. You'll download the Insight Timer app. It's free. And you'll get the course. It's just a few dollars for a big impact on your life. Watch your life unfold as you begin to have more self-awareness, self-acceptance, find confidence, which is my favorite thing in the whole world. It's time. Embrace this. It's here for you. So if you're ready to control the controllables in your life, go to kanaecorder.com/meditation-course. I'll see you there. And don't let the word meditation scare you. I walk you through the whole thing, and it's so easy. For just a few dollars, you can start controlling the controllable today. And now, let's get on with our show. Today, we are going to discuss business in relationships. We'll discuss some of the complex life decisions. You know, those decisions that often come between the love, the day-to-day stuff that makes the love stuff a little harder. We're going to talk with someone who has a numbers background, but I promise not to scare you with all the numbers and details. The goal of this episode is to reduce the stress around the day-to-day details and complex life decisions like insurance. So veteran entrepreneur Marc Turim founded Turim Financial Services to help protect families and businesses while safeguarding their assets. He is a licensed Allstate insurance representative in the state of Illinois and Wisconsin and consults with clients at his Deerfield, Illinois agency on various insurance packages, including auto, homeowners, small business, retirement planning, and life insurance. So join me in welcoming our guest today, Marc Turim. Hey, Marc.
Hi, Kanae. It's my pleasure to join you today.
Thank you so much. I am so glad to have you. I know we have a long history. Marc and I have been friends a long time. He was my agent at one time before I left and came to Atlanta. I think it's probably been almost maybe 15 years, I think. What do you think?
Yeah, it's been just about 15 years. That's a great guess.
So I know that you have a really strong background in this. I'm excited to talk to you about this. And I also know that you have been married for, is it 40 years? How many years is it?
Just under 38.
38, yes. So I was going to say 38. I thought that was the number, but I didn't want to shortchange you just in case you had gotten all the way to 40. So because you have, history in both areas, we'll look to you for a little advice. How's that sound?
That sounds super. Thanks.
Okay, good. So I typically start out the show with the same question. What is your idea of prosperity? Because I find that prosperity means different things to different people.
My idea of prosperity has to do with happiness. I think, once you've found happiness, you've found true prosperity.
Yes, absolutely. And I've been known to say that money can buy happiness. You just have to know what truly brings you happiness. I think that kind of goes into what you're saying. It's like the prosperity and the happiness are related. A lot of times people believe that they've got to get the money to be happy or be prosperous. but really you get the happiness. And because of that happiness that you generate, typically you end up feeling like you have enough, whether you are a thousandaire or a millionaire.
One thing that people will be surprised about is, especially those that have read the book, The Millionaire Next Door, is that many people present themselves as having a lot of money, driving big cars, living in fancy homes, etc., and are overextended and have huge debt. And then you'll find other people that drive an old car, live in a small house, maybe don't spend too much on vacations or other things like that. And they have, bank accounts that are extremely large. So people will fool you. So
That is so true. I do find that to be true. I do like to tell, especially like my single women, when they're dating someone and, he has a fancy car or, big fancy place, I'm quick to say he has a lot of bills, not necessarily a lot of money. So let's examine the finances. Let's not jump too quickly.
exactly.
I'm wondering, do you find that people feel confused about what they need when it comes to that financial planning? I bring this up because you say that people look at the material things thinking, okay, I got all the material stuff, I'm wealthy now. But it's really not what you spend, it's what you keep. So do you find that people are confused about what they need financially to be secure or to be prosperous?
Exactly. Very few people even take the time to do a simple Excel spreadsheet of their budget or what they spend on a monthly basis. And if they did even something simple like that, they could see, what they spend that's necessary and what they spend that might not be necessary, and then make a decision whether they want to continue or not. So it's important to know what you're bringing in and what's going out.
Yeah, exactly. And one of the things you said is necessary because it's part of the law. Like auto insurance is necessary, but life insurance is necessary, but there's no law attached to it. So a lot of times people don't have it in place, or if they do, they don't have enough in place. I see some confusion around that too. Can you give some color to what people should be thinking about when it comes to insurance planning?
Yeah, well, I think you mentioned life insurance first, and very often people don't realize that, especially young families where they may have two incomes in the household and they have quite a few expenses, including a large mortgage. And if they lost one of those incomes, either to death or disability or something else that was unfortunate, they not only would lose a loved one, but very often it causes other problems with the home. We see families moving in with parents, adult families moving in with parents. We see children having to leave the schools they're attending and leaving their friends behind. So not only is it upsetting perhaps to lose a parent, but then you've got all this other unrest that they may be faced with. So that's what life insurance and disability insurance and some of the other products out there in the marketplace can do to help you prevent.
Yeah, that's a great point. What about when the primary goal is to like have the cheapest insurance?
That's always good. As a matter of fact, there's a lot of new things in the marketplace that are available. As you mentioned earlier, I'm with Allstate Insurance, and Allstate just introduced a new product called MileWise, which is pay by the mile insurance. So say you're a city dweller, you live in Atlanta or you live in New York or wherever the case may be, and you're either taking public transportation, perhaps Uber during the week. Maybe you get on a plane on Monday morning and don't come back till Friday because you're a consultant or travel for business, or you just, or perhaps are even working at home.
Mm-hmm.
So why spend the large dollars for auto insurance when you can pay by the mile and just pay for what you're using?
That's so cool. I did not know Allstate had that. I drive quite a bit, so that wouldn't work for me, but I know so many people that that would work for.
Yeah, absolutely. There's, not only people that are commuting by train or working from home, but also then you have your seniors and retirees that might
Mm,
apply to as well. They're not driving as many miles as they used to when they were working.
right. Such a good point. Oh, I like that.
There's a lot of new things coming out, in the financial product industry.
So when money is tight and they do have to maybe make some decisions about not doing this or not doing that, what things are necessary? So what should they say? Well, this can't be cut. Because what I find personally, even being in the business, I found property and casualty insurance to be a little confusing, and knowing exactly how much I needed. And when I did sell it, making sure that clients had exactly what they needed. How do you make some of those tough decisions or complex decisions around property and casualty insurance?
Well, people are confiding in trusted advisors like ourselves, and we try to guide them through the process and where it's important to, commit their dollars and where there might be savings. And if they use their dollars in the right places, they can save quite a bit. So it's not always necessary to spend huge amount of dollars in order to get the proper protection.
Okay. Now, I am going to go a little deep in one area because this was something I found out, but I'm probably not going to be able to explain it right. But there was the uninsured motorist, that part of your property and casualty. And at some point, I found out that once I came to Georgia, somehow that got mixed up and I didn't have like enough or the right amount. And somebody pointed it out to me and I was like, oh, wow, thanks for pointing that out. And the person said, the gentleman, he said that was a place where he saw people go too low and they're just not prepared. And in a place like Atlanta, where that happens a lot, that whole like hit and run or uninsured motorist, then you end up having to pay for everything.
Yeah, it's required coverage in most states, and it does vary from state to state. So if you move from one state to another, you need to check the state requirements to make sure that what you have is up to date, because what you had in the other state might not be enough for your new location.
Yeah. What about like umbrella policies? Do you have to be wealthy to have one of those?
That's another great question, because umbrella policies are very important. So let me just give you a quick example. So an individual driving down the road and hits another car head on, causes injuries to the other driver, and the judge, when it's brought to court, says that the negligent driver has to pay, say, $700,000. So if you have, a lot of people have $100,000, $300,000 insurance, and the judge awarded $700,000. So I'll let you do the math, Kanae. 700,000 less 100,000. What would you have to come up out of your pocket?
Yeah, almost $500,000 that's coming
more,
out of your
more. I don't know about you, but most people, including myself, would find it rather difficult to come up with that kind of cash. If you didn't have that available, they could even garnish wages. So you might not only have to pay a lump sum, but how would most people do if they had 20% less of their income from each paycheck? It would make things difficult.
Oh, yeah, absolutely. That's a great point. I'm glad I asked that question because I find that people think there's this whole thing about not having enough. And of course, I talk about prosperity. So I believe that there's always enough, but planning is just so important. A lot of times we think we don't have enough, but if we plan properly, then we do. And what you just said was a way that we could plan. Now you're planning for the unfortunate or that what if scenario,
Yes.
But putting those plans in place can really help protect you, because it doesn't matter how great your financial plan is. If a catastrophic event happens, then that plan is out the window.
Yeah, and if, for instance, you were at the local market and somebody pushed a shopping cart into the side of your car and caused a ding in the side of your car, while you wouldn't be happy about it, in most cases you would probably have the $500 or whatever it would be necessary to repair your car. But when a major event happens, such as the one I described earlier, and you're coming up with over $500,000, that's something that you need to share the risk with the insurance company so that you don't have to have that risk yourself. Let the insurance company, for a very small fee, they'll take that risk for you.
Yeah, that's a great point. Now, I'm going to switch gears just a little bit because what happens when someone comes to you, and let's say it's a couple, and they have different opinions about what's needed financially? What do you see happen a lot when that happens? What is the challenge there?
Are we talking about their savings? Or are we talking about insurance? Or what are we talking about?
Oh, well, that's a great question. So let's say they are doing financial planning with you, because I know you said you do
Uh-huh.
financial planning.
Yeah.
And so I'm sure insurance is going to come in there, but also their savings plan is going to come in there too.
Yeah,
And
absolutely.
a lot of times I find that couples have two different ideas of prosperity and how they show up and what they think they need. So what happens when they're like at odds about that?
Well, the important thing, I believe, is that we get a handle on what they have and what their earnings are and where they're spending their money. So either overextending themselves or perhaps not spending anything because they don't know what monies they have
Mhm.
can cause some disruption within any family. The most important thing, first of all, is to get a handle on what's coming in and what's going out, and then make some decisions that they need to reach agreements on what's important and what's necessary and what are luxury items. So then hopefully they can reach a decision on that. First thing is that they have to understand what they have and what they've been doing, what's their income and what their expenses have been.
Absolutely. So most of the people listening have been listening for a while, and so they are familiar with some of these terms. We talk about a spending plan, and that's where you really plan out what money is going out and what money is coming in. And it sounds like that's what you're saying. If, first of all, get a clear understanding of your spending plan. What is your budget like? What do you have so that you can know what you can spend and then what you need to hold on to?
Couples tend to talk about it, but not often enough do they actually get it down on paper or
Yep.
a spreadsheet or whatever they're using. So,
Yes, that is true. They're starting to have those conversations, but execution doesn't happen. It's like we know what we need to do, but we're not actually doing it. And that goes into, you talked a little bit about behavior, like really watching their behavior so that they see what their habits are. And so if they see that they don't do a good job executing, maybe having an advisor like you in their life would be important so that you can make those phone calls and remind them, or send that email and remind them, we're still working on this. This isn't done yet.
they might have a cable package where once they take a look at it, they may decide that, they're not even using most of the stuff they're paying for. Or perhaps they, decide that they can be very happy going to Starbucks 3 days a week instead of 7 days a week, or, whatever it is in their particular life that's, affecting their bottom line. So they just need to understand what it is, and then typically they can reach some agreement.
Yeah. And it sounds like what you're saying is they can shift some of those dollars. So it's the same amount of money that they're spending. You're just shifting it in different places. So if you have been spending $200 on cable, but you find that you don't even watch 90% of those channels,
Yeah.
then reducing that to $100 maybe, and then taking that $100 and getting something important like your life insurance, or putting it towards, disability insurance, something you don't even have yet. So it could add to your plan, or maybe putting it in savings. So really just moving that money around so you don't have to go out and get another job. You may just need to cut some expenses first.
Exactly. Yeah. Very often they're surprised, first of all, to see how inexpensive life insurance is. And if it's $15 or $20 a month, they go, well, I don't have another $15 a month in my budget. And then we sit down and look and seeing what they're spending their money on. And very often they've got a package that includes several things that they're not even using, and they can move the dollars from one place to another. So, and perhaps even save money while doing it.
Yeah. In my course, I tell people about knowing where they are. So, like I asked you in the beginning, what is your idea of prosperity? That's kind of where a person wants to go, right? That's the ultimate goal. But in order to get to the ultimate goal, you have to know where you're starting. And a lot of what we're just talked about is kind of that, know where you're starting, know where you are now so that you can get where you're trying to go. Because if you ask anybody for directions. How do I get to Deerfield, Illinois? They're going to ask you, well, where are you coming from? So you got to know that. So that I call their financial inventory, and really pulling together what you have, because the older you get, the more you find you have accounts here and accounts there, and you probably forgot about some 401k somewhere at some company, and you get a little confused about what you need because you're not even clear on what you've done so far. Have you found that?
Yeah, that happens all the time. That brings up another good point about consolidating. So even with, whether it be your 401ks or your other, you might be able to eliminate some expenses that brokerages or banks are charging you. You might be limited with your choices if you've left a 401k at an old provider or an old employer. And also with things as simple as your home and auto insurance, very often we find that, one spouse might be using one company, another one using another company, where if they combined their policies with one or the other company, that they might have considerable savings. So I just did that yesterday for a young couple that had just gotten married, mid-30s, and they were surprised at how much we could save them just by consolidating their existing policies without, it wasn't even necessary to change the coverage that they had. So.
Cool. So I find that there are different stages, I guess, in a couple's life. Like you just named one. They recently got married, so they needed to look at their finances. What are some of those stages? And I brought up one earlier, the teenage drivers. That's a big stage that you start to look at finances and what that responsibility means. What are some of the stages that people need to be thinking about as they transition through life and those complex life decisions?
Typically, you start out as young singles, and that's also a good time to first start thinking about life insurance, because while you're young and healthy, you can get the best rates on your life insurance. You don't know what's going to happen later on. So it's important to consider life insurance as well as other financial decisions at that point. And then as you get married, you might be getting yourself into a condominium or a home. You might have a mortgage at that point. You have other financial needs at that point. And then in a lot of cases, start having a family, maybe young children, saving for education. Once again, making sure that you have the proper life insurance. So important when you have children, and starting to talk to an estate attorney to make sure that not only do you know where the finances are coming from for your children, but if something were to happen to the parents, who's taking care of the children and where they're going to be, to make sure that they wind up in a place that you want them to be in, not just somewhere because you didn't make any plans in advance. Yes. And then of course you're going to go into the, more of your middle years, where you're going to start making sure that you've been putting away enough for retirement. Of course, the earlier you start saving for retirement, the better off you are. The money will multiply many times the younger you are when you start saving. But certainly as you get into your 40s and your middle years, that you have to make sure that you've started to consider, where money for retirement is coming, and make sure you're spending your money properly. As you get into your 50s, then you start thinking about the upcoming retirement, your Social Security, how you're going to use your Social Security funds, when you're going to start taking your Social Security, your long-term care needs, who's going to take care of you as you get older. You don't want to have to move in with family, and that can be quite a problem for any family. And then, as you get closer to retirement age in your 60s, how you're going to start using some of that money that you've worked so hard for all your life, and make sure that you have enough so that you know how you're going to be living and where you're going to be living. Do you need to downsize? Do you need to do other things to make sure that you're comfortable in your retirement years?
Mm-hmm. And one of the things you mentioned early on was life insurance when you're younger, because your rates are lower. What I found when I was in the sales part of the business is that people would say, oh, I have it at work. And so they wouldn't get it, especially when they were young, not knowing that, oh, you're going to change jobs, that's going to go away. And maybe you're going to want to be an entrepreneur one day. you need it outside of work. Do you find that to be true?
Yeah, most people should have a common rule of thumb is, 10 times your earnings. So very often the insurance at work is a 1 times multiple of whatever your salary is. It's generally not enough. And as you said, it's not portable. So if you leave that employment, it doesn't go with you. It's gone. And then your age and your health situation could have changed. So whatever you have at work is great. By all means, take advantage of it, but it's never enough and it's not portable.
Mm-hmm. Good point. Now, I have two more questions for you. When I'm talking to couples, a lot of times we talked a little bit about those different opinions. And I know that it usually comes from old programming. Maybe it's society, maybe it's their parents, maybe it's the next door neighbor, whatever. How do you help people adjust that old programming? I mean, you've been in the business a long time, so you can say, oh, that's kind of the old way to do things. It's different now. Do you see that sometimes you have to instruct people as to what to do now, kind of like that drive by the mile kind of thing you pointed out?
But things are changing all along, and that's why people depend on advisors such as myself to help them know what's current in the marketplace and to do what's best at the time when they're trying to make these decisions. Because what might have been the right decision for parents or grandparents, may no longer be the right decision for you.
Mm-hmm. And I like that because a lot of times people are making decisions from maybe what they did in the past, or maybe they didn't do any research, or maybe they did research on the internet and what they've searched is just old information because the internet is
Yeah.
not updated. So sometimes if you Google something or search for something, it's some old article that comes up and it might not even be written by a professional.
Yeah, sometimes it's a good place to start, but you shouldn't be making your final decisions based on things that you see on the internet. It's always best to talk to somebody that's knowledgeable.
Absolutely. The last two, actually, did I say I had two questions left? I think I must have had three.
You
So
did. We'll give you an extra. We'll give you a bonus question.
thank you. In my course, we do what's called navigating the money cycle, and it's earn, grow, protect, gift, and enjoy your money. In that protection area, that's when we talk a lot about insurance and taxes. Now, I find that couples don't understand the ups and downs because we also talk about protecting your relationship. So these last two questions are going to be more on the love side, more on the relationship side. So while you're getting your protection in place, like your life insurance, your disability, auto, and stuff, what do you say a couple would need to put in place to protect against those ups and downs?
There's some basic rules that people go by. For instance, you should always have, a 6-month emergency fund available. And, you need to be saving for your retirement at an early age and things like that. There's going to be bumps in the road and surprises along the way. For instance, what you're making in a salary today may, while you're hoping it will grow, you could also lose that job and find yourself with a lower paying job or perhaps being unemployed for a period of time. So it's important to have some emergency monies available and a backup plan so that you can deal with those bumps in the road. They're definitely, everybody's going to experience them. So it shouldn't be a surprise.
I certainly did. And I was a little surprised because I came into the business when everything was so easy. So when it did crash, I was a little surprised. I was like, what the? You can prepare. And the great thing was I did have savings. What I didn't shift though was I'm typically a generous person. And so when things crash and I did have to close my business, closing your business is sort of like getting laid off. You don't have an income, basically you're unemployed as you start a new business. And I was still very generous. I didn't shift my behavior to say, okay, now that I'm living off my savings, I can't help other people as much as I used to. So I also find that protecting your plan sometimes means setting boundaries and putting boundaries in place so that okay, this is my family, my immediate family. Outside of that, if a crisis happens, we have to take care of us first. We have to put on our mask first before assisting others.
Exactly. And you can't necessarily spend every dollar that you make along the way, because there will be bumps in the road, and hopefully you're putting some aside to cover yourself for those bumps in the road.
Yes. So my last question is, what is the best marriage advice you've ever received, or the advice you wish somebody would have told you?
Well, I've always said that rule number one is that your wife is always right. And rule number two is when she's wrong, go back and see rule number one. So, happy wife is a happy life usually. Can stick with that one as a starting point.
Yeah, I find that to be true, because if the woman of the house is not happy, everybody is going to know it and everybody is going to feel it. And if she is, you'll feel that too. So it is best to keep her happy. Like you said, makes sense. I like that.
Yeah, it's rule number one. The wife is always right.
Right.
Anyway, that's a good place to start.
That is a great place to start. And what I find a lot of times with the couples that I work with, I often tell them to focus on being the right partner rather than having the right partner. And the same would be true for the women. So if this was a woman I was interviewing, basically saying that, let your husband be right. You can be right or you can be happy.
There you go. And communication is so very important too. It's got to be a two-way street on communication. You've got to talk about the good things and the bad things and just not hide from them.
Yes, communication is number one, because you can get through so much if you can just talk about it. And sometimes you're not having a conversation. One person is stonewalling or shutting down or holding all their feelings or emotions or thoughts in. But if you can just talk about it, even if you don't know exactly how, just starting that conversation and getting that communication out and knowing that you don't have to be right, that makes it so much easier.
Exactly. Couldn't have said it better myself, can I?
Thank you. So I really want to thank you for sharing all this great information. I know that people are taking notes and jotting down. We'll also have show notes, so you can check the show notes. I'll jot down a few things that were takeaways from today. But I also want to know, so if somebody is in Illinois or Wisconsin and they want to work with you, Marc, what is the best way for them to connect with you?
They can easily just call me. Our office number is 847-236-9000. They can find us on our website at allstate.com/Marc Turim, or they can also find us through our Facebook page, which is Turim Financial Services. So we're easily found. Allstate Insurance, Deerfield, Illinois. And if anybody has any questions or we can help anybody, please get in touch with us.
Awesome. Thank you so much. We appreciate all your good details. And you guys, if you need help and you're in Illinois or Wisconsin, reach out to Marc. If you're not in Illinois or Wisconsin, you'll find an Allstate agent right around you. So until next time. As the year comes to an end and the holiday season begins, you may find it difficult to set boundaries, stay focused on your goals, and enjoy the moment. You may find yourself over-planning, judging, comparing, and even stressing. And I bet you none of these things are part of your overall idea of prosperity, are they? So what is your idea of prosperity? Does it involve happiness, peace, security, love, and maybe there's a certain dollar amount attached to it? Well, I can help you stay focused on the things that are really, truly important to you and keep you from getting distracted by the things that bring you down, especially during this season. You don't have to be unhappy. If you want to stay on course, connected with your true, authentic self, and love your partner and enjoy the moments and memories you're creating, or then connect with me. Because remember, what you focus on expands, and I can help you focus on the things that are truly important to you. There are 3 ways that you can stay connected with me. The first, you can join the Prosperity Club for free by taking the Money Mentality Quiz. Go to KeneCorder.com/money-quiz and take the Money Mentality Quiz for free. And you'll begin to get our weekly prosperity report. Number 2, you can join the Prosperity Club at our low introductory rate. Go to KeneCorder.com/prosperity-club. You'll receive 3 courses and weekly coaching plus your prosperity report. And number 3, you can get a one-on-one consultation with one of our wealth and wellness coaches. You will get your questions answered. You'll set goals, determine where you are and where you want to be. And we can help you plan to stay on track as you continue to create more love and money in your life and relationship. So for your consultation, go to KeneCorder.com/consultation. So those are the 3 ways. Take the Money Mentality Quiz at KeneCorder.com/money-quiz. Join the Prosperity Club at our low introductory rate at KeneCorder.com/prosperity-club, or get a consultation by going to KeneCorder.com/consultation. All of this will be in the episode notes. So let's start bringing more prosperity your way. Decide, how would you like to stay connected today? It's time for 5-minute activation, a quick financial therapy session to get you activated and on your way to increasing the love and money in your marriage. So can I get 5 minutes of your time? Just 5 minutes for a financial therapy activation. Welcome to today's 5-minute activation. Today, we're going to discuss prepare versus plan. There's a difference. I like to look at it like this. You prepare for the things you do not control, and you plan for the things you have control over. So you prepare sometimes, and you plan other times. Planning for the future. You plan for the future to eventually come. You kind of expect it. You plan what you're going to wear tomorrow. You expect tomorrow to come. But you don't plan for a car accident to happen. You don't plan for sickness. You don't plan for death to happen in your life. You prepare for these things. You put systems in place so that in the event these things happen, you are prepared. Insurance is one way to prepare and transfer risk. Another example is credit monitoring. I used credit monitoring because I was a victim of identity theft before, and I couldn't control it. It's something that I have to prepare for just in case it happens again. It can be really tough to control sickness in your life, but if you prepare, be proactive by eating healthy and doing the things that build your immune system rather than tear it down, you would be preparing for good health. Eating healthy, working out, all of these things help you prepare for the lifestyle you'd like to have. If you go into the world expecting things to happen, and that's what planning is. Planning means you expect it to happen. So if you're putting a plan in place, like you're planning for the worst, then it's likely that you'll receive the worst. You could shift that thinking just a little bit, and you could prepare for the worst and expect the best. Expectancy is when you receive what is happening with grace and ease, rather than trying to control what is happening, struggling and fighting and pushing. When you feel pulled in a direction, you prepare as you are pulled. Kind of like getting directions from your GPS. Try not to get bogged down with the plans, the planning, the plan itself. Now, you've heard me say before, fall in love with the plan. Yes, I still believe that. Fall in love with the plan. That plan is the daily routine that takes you to your ultimate goal. The plan is to wake up in the morning and do your meditation, do your workout, drink your healthy drink. The plan is to be kind to others. The plan is to receive the blessings, even the small ones, the sunshine, the rain, the leaves falling, whatever blessing that comes your way. Plan to receive it. Fall in love with the plan. But we must also prepare. Prepare for when things may not go our way, because at some point it may not, and that's okay too. Prepare for what may come. Plan for what you want out of life. Prepare for the unexpected. You'll never be able to control everything. You'll never know what's going to happen. So you prepare for those things that you cannot control, those things that you may or may not welcome into your life. You plan for all those things you want in your life. Plan for love, plan for kindness, plan to create the life that you desire, your prosperous life. And as you plan for your prosperous life, putting systems in place to help you prepare for the sacrifice or suffering that may also come, that will help you move through life with grace and ease. Prepare as you plan. Know the difference. And that's our 5-minute activation for today. Hey guys, thanks for listening. If you want more love and money conversations, subscribe to this podcast. Also, tell your friends about us. I'll see you next episode. But in the meantime, head on over to KeneQuarter.com for more tips, tools, and resources. And go ahead and leave us a comment if you like. We'd love to hear from you. This show is not to replace professional counsel. The best advice comes from a professional you know. The topics discussed in this podcast are general in nature and are for entertainment and informational purposes only. We encourage you to meet with a professional to discuss your specific situation, whether financial or therapeutic. That's all for now. I'll see you sooner. Remember, no matter what anybody ever tells you, you can have wealth in all of its forms. Believe it, and you will soon see it.